This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil demand will grow sharply in the next few years as economies recover from the pandemic, OPEC forecast on Tuesday, adding that the world needs to keep investing in production to avert a crunch despite an energy transition. The view from the Organization of the Petroleum Exporting Countries contrasts with that of the International Energy Agency, which in a May report said investors should not fund new oil projects if the world wants to reach net zero emissions. Oil use will rise by 1.7 million barrels per day in 2023 to 101.6 million barrels of oil per day, OPEC said its 2021 world oil outlook, adding to robust growth already predicted for 2021 and 2022 OPEC, and pushing demand back above the pre-pandemic 2019 rate.
British wholesale gas prices for delivery in the winter months exceeded 200 pence per therm on Tuesday, driven by a drop in Russian gas flows and wider energy market strength. By 10:56 GMT, the wholesale gas price for winter delivery rose 20.2% to 218.40 pence per therm. This year, benchmark wholesale British gas prices have more than trebled due to several factors including low stock levels, strong demand in Asia making it more difficult to attract LNG cargoes and maintenance issues at key infrastructure and a drop in flows to Europe from key producer Russia.
Moving on to the top news in the energy sector.
China faces mounting pressure to ramp up coal imports and ensure supplies to keep lights on, factories open and water flowing as a severe power crunch roils the northeastern industrial heartland. With electricity shortages sparked by coal shortages crippling large sections of industry, the governor of Jilin province, one of the hardest hit in the world's number 2 economy, called for a surge in coal imports, while a power company association said supply was being expanded, at any cost. News organizations and social media carried reports and posts saying the lack of power in the Northeast had shut down traffic lights, residential elevators and 3G mobile phone coverage as well as triggering factory shutdowns.
India, the world's third biggest oil importer and consumer, signaled on Tuesday that a spike in oil prices would speed up the transition to alternative energy sources. India has been at the forefront of efforts to urge the Organization of Petroleum Exporting Countries, OPEC, to ensure responsible pricing of oil that suits both producer and consumers. Last week, crude oil prices inched upwards to 7-week highs. The cost of crude oil has considerable impact on the pace of energy transition pathways, Oil Minister Hardeep Singh Puri said at the launch of OPEC's World Oil Outlook.
Next, we have the top news in metal markets.
Chinese coking coal and coke futures surged on Tuesday, fueled by concerns of tight supply amid Beijing's toughening emissions standards, although demand for the steelmaking ingredients remained tepid as mills cut production. Under the energy consumption restriction and environmental policy, the supply and demand for coke contracted, Huatai futures analysts wrote in a note. Coking coal imports from Mongolia are still sluggish while the shortage in thermal coal also indirectly affected coking coal blending supply, Huatai futures added.
Australia will set up a $2 billion $1.5 billion loan facility to help finance critical minerals projects in the country and get them off the ground, Prime Minister Scott Morrison said on Tuesday. Critical minerals including lithium and rare earths are essential to smart technology and clean energy but tricky to mine, process and market, which can make it difficult for new developers to line up funding. The commercial dimensions of the critical minerals market mean it is a difficult place to get established, Morrison said in a statement, adding that the projects will be strategic for their role in the future energy economy. We will now look at the top news in the agricultural sector. China's corn prices are likely to fall in 2021-22 on good supplies of feed grains in the new year and expectations of a bumper harvest from the new corn crop, an analyst from a government institute said on Tuesday. Corn prices are probably going to hit bottom levels between end of December and Chinese Spring Festival, the expected peak period when farmers sell the new crop, this year, said Li Zigui, analyst from the China National Grain and Oils Information Center, a government think tank. China's corn futures prices have fallen 13% from record highs hit in May.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.